Good morning, traders. My name's Aaron Hill, and this is a live market update of the current situation as of 9:45 a.m. GMT, as tensions have clearly escalated between Russia and the Ukraine. I'm sure by now most of us have heard that that Russian President Vladimir Putin ordered a full-scale invasion of its neighboring country, the Ukraine. In what the German Chancellor has said is a terrible day for Ukraine and a dark day for Europe. For me personally, this is an understatement. This, of course, has seen international disapproval and threats of further sanctions from the West, and sending markets tumbling worldwide. As you can see on the screen right now, we have the European cash equity index is up, and we are, aside from the London's FTSE 100, we are down over more than 3% across the board. So the FTSE 100 is down 2.5%. Germany's DAX is down 3.5%. France's CAC 40 is also down 3.5%, and Euro Stoxx 50 is down 3.7%. Now, this of course follows the lead taken from Asia equity markets. As you can see here, Japan's Nikkei 225 finished lower by 1.8%. South Korea's Kospi finished lower by 2.6%. And of course, Australia's ASX 200 finished down 3%. Now, in terms of the US equity index futures, we are also lower across the board, as you would expect. Dow Jones futures is down 1.8%. S&P 500 futures is also down by 1.8%, and the NASDAQ 100 futures is down by 2.4%. Now, according to the Financial Times, in a recent address on state television, Putin warned other countries against the temptation of meddling in the ongoing events, and said Russia's response would lead you to consequences that you have never encountered in your history. Putin went on to say the goal is to defend people who have been victims of abuse and genocide from the Kiev regime. Putin claimed, this is what Putin claimed. So despite there being a lack of evidence for any such crimes. Putin also said that Russia doesn't plan to occupy its neighbor, but said that the action was necessary after the US and its allies crossed Russia's red lines by expanding the NATO alliance. The US President Joe Biden called Putin's move an unprovoked and unjustified attack, and said the world will hold Russia accountable. So additional developments which I've seen on the news feed just now: the Ukrainian Defense Ministry has shot down 6 Russian warplanes, and also Ukrainian banks have limited withdrawals. Now onto the markets. Of course, as you would expect, there is huge volatility being seen on the US dollar index. Currently we are up by spot 6%. Now this for me is a clear safe haven bid. Further buying, this is a daily time frame, further buying could lead to quasi-money resistance at 97.45 being brought into the frame. Now onto the euro. As you would expect, Europe share currency is also lower by spot 7% currently. This is in line with the technical frame from the weekly time frame. As you can see, we have recently retested a resistance area at 1473, 1583. And I did say in the previous market analysis that we, given the lack of energy in attempt to break I think it's the 14th of January high at 1483, as well as a soft bid from the trendline resistance turn support test here, there is a high probability that we are breaking lower and possibly testing this prime support on the daily time frame at 1161, 1199. Now on the H4 time frame here, this has seen prime support at 1262, 1304 engulfed, and has led to prime support at 1205, 1230 entering the fold. Now we have seen a mild bullish reaction from here, but nothing to really write home about at the moment. Below here is what I'm really interested in, the back pattern, the harmonic back pattern, which is made up between the 1164 region, the 1164 level and the 1181 level. So between this area, there is a in harmonic parlance, if you will, there is a harmonic bat pattern PRZ. So do be aware of this, but do also take note that harmonic traders will, if they take an entry in here, they do generally place their stops below the X point, or in this case, maybe even the decision point at 1114, 1139. Okay, moving over to the Aussie dollar. As you would expect, the Aussie dollar is a risk-sensitive currency and is feeling the sting of recent events. Currently, we are down 0.8% on the day, and really this is in line with the technical picture that's been presented recently through the market reports. As you can see, we have had a lackluster bullish picture from prime support on the weekly time frame at 69, 68, 72, 42, and this was since late November of 2021. Now, in line with this, we are below the 200-day simple moving average on the daily time frame, and that's currently trading at 73.36. And this, combined with the trendline resistance taken from around the high of 78.94 and Quasimodo resistance at 72.78, the red area here, we did see a shooting star, a bearish candlestick formation form, which has led to obviously further selling taking shape in recent trading. Further downside from here has the familiar decision point at 69.64, 70.40 to take into account. Now, on the H4 time frame, we are testing trendline support, and this is drawn from around the low of 69.70-ish. So if we break through this trendline support, this will be in line with the daily time frame, daily time frame's technical picture. Now, on the H1 time frame, look, we've cracked through. We've come from a trendline support term resistance right down from this low here of around 69.70, and we also cracked through a channel support which was taken from around the low of 70.85, and also pushed through 72. So this is a very not a very, but this is a bearish picture for the Aussie dollar for me right now. And also, just before I forget, the RSI is coming off resistance around the 58.43 region. If we do crack below the 50 center line, this would inform traders that average losses are exceeding average gains at this point in time, which essentially equates to negative momentum. Now, let me just move this out of the way. Okay, on to the dollar yen. As you would expect, the dollar has fallen as the Japanese yen is bid as it's recognized as a safe haven currency. So we have seen lower moves in the dollar yen, and it currently only trades lower by 0.2%. Now, in terms of where we are on the technical picture, I won't worry too much about the higher time frame flow at the moment. The only thing I will mention is the 1.272% Fibonacci projection has, on the weekly time frame, has and remains to be a headwind, a technical headwind. And for any harmonic traders, this also represents a AB equals CD alternate, an extended D leg formation. So technically, this is why we are seeing a reaction here, I believe, with the potential for a double top pattern, as you can see here, identified with the blue arc. Now, if we do come below the pattern's neckline, this is a bearish signal for the dollar yen, but we are not there yet, and we have weekly channel support taken from the low of 102.69 to face before we obviously push lower. In terms of everything else, look, we have had an incredibly harmonic dollar yen. I have mentioned this in previous reports as well. I'll just go over it really quickly now. So we have an AB equals CD. For AB equals CD traders, this is a perfect market. This has been a perfect market. So we had an AB equals CD bearish approach to the upside. This will be the A, B, C, D. And this, as you can see, terminated at the daily Quasimodo resistance at this point here. So it had higher time frame confluence as well. Let me just zoom back out. But what happened is, on the way down from the following the reaction from the AB equals CD bearish formation, we also formed another AB equals CD bullish formation. This is a formation to the downside. So we had the A point here, the B point here, C and D. But what's interesting is the A, B, C, D bullish formation terminated at the 61.8% Fibonacci retracement ratio of around 114.57, which was taken from legs A to D. Now, for anyone that follows harmonics, will note that this is a common take profit target with the 38.2% retracement being the first objective, followed by the 61.8%. As you can see, we did reach that, but we also brought in the AB equals CD bullish formation at this point here. And, you know, I wasn't surprised to see a reaction form here because the confluence was just was pretty strong for me. And yeah, so we had a reaction, and notably we have reacted to the 38.2% of this AB equals CD bullish formation. So it was derived from legs A to D. And we have had a reaction, as I said, from the 38.2%, which essentially does complete the pattern, but and would have likely seen traders long from this point, certainly reducing risk to break even, and also more than likely taking partial profits off the table. Now, I'm going to quickly move over to the pound dollar. Now, for those who've been following the recent analysis, you will note that this daily resistance at 36.02 has been noted on a number of occasions in my market analysis. And as you can see, we have eventually sold off from this level. And do note this was just south of the 200-day simple moving average at 36.73. Now, in terms of where we are on the H4 time frame. No, sorry, let me just highlight the downside objectives on the daily time frame. So we have support at 33.55 to take into account, but below here we also have a Quasimodo support at 31.19, which conveniently aligns with the double top take profit target from the weekly time frame. Now, on the H4 time frame, we have smashed through Quasimodo resistance turn support. Now, this was a move I highlighted as a high probability because of the amount of times this level had been tested. So we have smashed through this level, and we are now testing a prime support at 34.28, 34.44. So look, and this has also seen prime support on the H1 time frame at 34.77, 35.14, and you know, this is just this minute happened because I was going to highlight this decision point, but this is being taken now at 34.41, 34.59. So the main attention for me right now on the pound dollar is this H4 prime support, again at 34.28, 34.44. Now, big news on oil, of course. Oil is on a tear right now. Brent crude, as you can see, Brent crude here is considered by many to be a benchmark of an oil benchmark, smashed through the $100 a barrel mark, and as you can see, WTI is fast approaching its $100 a barrel threshold. So look, the major difference between WTI here at this point here and Brent crude is its location. So Brent crude originates from the oil fields of the North Sea, while the WTI, the West Texas Intermediate, is from US oil fields. And Brent crude is more ubiquitous. So as you can see, we are now above the $100 mark on Brent crude, and we are testing a resistance. Not sure how much how much of a resistance this will be given the current situation, but this resistance comes in at 105.84, 102.98. What we could see happen here, let me just zoom into the Brent crude chart. We could see, look at this candle, it's just insane. It is just insane. So we also, just to note, we also have broken above this ascending channel limit to test this resistance here. What we could see is sellers come in profit taking, I guess, and things like that, and a retest of the $100 barrel, $100 mark to form potential support. And this could be a potential. This could be an area we see buyers try to defend. Okay, so moving over to the crypto market, this is just an update, really. Cryptos tend to be viewed as risk-sensitive markets right now, and as you can imagine, we are lower. Major cryptocurrencies are lower, across the curve. We have Bitcoin against the dollar down 4.5%. We have Litecoin down nearly 11%. The Ethereum against the dollar down nearly 8%. And the Ripple against the dollar down by 8.2%. So this is just to keep you in the mix. And in terms of the US Treasury yields, the 10-year note, as you would expect, is down by nearly 5%, and is touching a low of 1.859% right now. You would expect this, of course, as traders load up on the safe haven bonds, right? So given the current crisis that's going on right now, and this is the same, you're seeing this across the curve here, guys. So the US 2-year, the US 2-year note is also down across, down by, let me just see, I can't really see, 5.6%. Yeah, so we're lower across the curve in terms of US Treasury yields. Finally, guys, on gold, we are now, for anyone that's watched the Monday's weekly technical talk, I did note that we have broken out of the symmetrical triangle on the daily time frame. And we also retested this level, as you can see here. Let me just zoom in. We broke out and we retested this level in strong form. Now, the price of gold this morning is is producing insane moves. So we're up by 2.5% in early London trade right now. And we are, as you can see, testing this resistance area between 1973 and 1951. Now, should we break above this resistance area, there is a reasonably strong possibility we are going to complete this symmetrical triangle. Now, the symmetrical triangle take profit target is measured from by the base distance. As you can see, the highest high and the lowest low within the symmetrical triangle formation, and it's extended from the breakout point. And as you can see, this would I believe, I think, if memory serves me correct, this would hit all-time highs for gold of around 2095. So let me just go onto the weekly time frame right now, just to show you this. So as you can see, look, this is just incredible move. So we are also just see the overall picture here on the weekly time frame. It's just insane. Also, just of note, on the daily time frame, the 50-day SMA is firm. It's reasonably firm above its 200-day simple moving average, which, in trading parlance is, I believe, it's referred to as a golden cross, which indicates a bullish scenario. So look, yes, so this is all I really have to say on gold right now. Look, this is all I have, really. This was a, yeah, these are really, I don't really have words to describe what's going on right now. It's a bit of a shock to me, to be honest. So yeah, trade safe. There's a lot of volatility out there, a lot of big moves. So yes, follow your trading plan, and trade safe. Yeah. So look, I'll be back. I'll be back in about an hour, actually, with another webinar on trading psychology. So please join that if you have the time. Okay, thanks so much for joining, and yeah, again, trade safe, guys.